Hey, it's your financial maven, Samantha Besnoff, CPA, and after almost 25 years in the accounting world, I've decided to share my insights and passion about money. Knowing your money and hopefully feeling less stress about your money is what I call being financially empowered. Welcome to the Your Financial Maven podcast. Welcome back to another episode of Your Financial Maven. So I'm going to shift gears a bit, and I'm going to go from talking about individual taxes to talking about small businesses. Now, there's a lot to unpack with small businesses, which I will be planning on making another minisode talking about the basics of small businesses, how to get started, what you need to know from a financial and a tax side with regards to creating and starting your small business. What's the difference between a small business and a hobby? So these are a lot of things that you need to be aware of, but I want to really focus, because it's year end, on the tax side of a small business. There are definitely things that a small business owner can do to review the year, prepare the year-end information, and be prepared to file their small business tax return when it comes time for tax season. So when I talk about small businesses with regards to taxes, I am talking about sole proprietors, partnerships, S corporations. And there's also something called limited liability company, LLCs. Now, here's the thing about an LLC. It is a different type of business structure when you set it up. When it comes to the tax side of things, the LLC business has to determine how it's going to file its taxes. And the choices for an LLC are sole proprietor, partnership, or as an S corporation. So to file like you would a sole proprietor, you would be a single member LLC, and you would file the Schedule C form, which is part of your personal 1040 tax return. To file for a partnership, that would be a Form 1065 for federal, and those are typically due March 15th. And with regards to an S corporation, those are also a business return. That's called an 1120S, S for shareholder, and those are also due March 15th. So now I'm going to go through a couple of things that I think are very important that you need to do for year end. This not only helps you have a better handle on your business, but it also gets you organized for any year-end information that you may need, whether you need payroll data put together, whether or not you need to do any 1099 forms for any independent contractors or vendors that you pay, any year-end reporting that you may have to do. Let's say you get some grants for the business, things like that, and to be able to file the tax returns for when they're due. So one of the first things that I recommend that you do is run a profit and loss report. Now, you may not have an accounting software like a QuickBooks or a Xero or a FreshBooks, and you might just have an Excel spreadsheet. There are things you can do with your Excel spreadsheet to create a profit and loss. And basically what a profit and loss is, you're taking the business income that you've received and you're subtracting all of the expenses that you've paid out from the business, and you end up either with net income, which means you've had more income than expenses, or you might end up with a net loss, which means your expenses were more than your income. That's just something to be aware of, because when you go to report your business income or loss, that can have different reporting requirements on your tax return. The other thing that you need to be aware of is something called a balance sheet. And that basically just shows all of your assets and your liabilities. So that would be your cash accounts, any credit card accounts you have, any loans you might have, any fixed assets that you have. So that's a report that can really help you determine where things are with regards to your assets and liabilities. It's a really good tool when you're looking at your fixed assets. If you've bought equipment or furniture or certain things to run your business and you're depreciating those items, that all shows up on the balance sheet. So those kinds of things will not show up on your profit and loss. Now, when you're depreciating a fixed asset, the depreciation expense will show up on your profit and loss, but the actual amount of the fixed asset and the accumulating depreciation that goes against that fixed asset will not show up on your profit and loss. So the reason why I say you should run this is because it gives you a general idea of how your business is doing. And I'll be very honest, I think these reports, balance sheet and profit and loss, should definitely be run quarterly, especially if you need to make some estimated tax payments, and also to give yourself a sense of how things are going. One of the other things when you're reviewing your reports, when you're reviewing your profit and loss and you're reviewing the balance sheet, especially your bank accounts and credit card accounts, if you have credit cards, you should be recording each individual expense that you charge on that card. There is no such thing as just credit card expense. You're going to want to know as a small business owner what your exact expenses are. You should know what your exact expenses are. And if all you're doing is putting down credit card expenses, you're not going to have a very good idea of what that entails. So I highly recommend that as you're paying things on credit cards, you make note of it in your accounting software or on your Excel spreadsheet or whatever you're using, or on a monthly basis if you have a bookkeeper or yourself and you're downloading those transactions into your software, making sure that you are categorizing them as individual expenses, not just as one lump sum. Credit card expenses, it's very important for that. And on that same line, for both the credit cards and your bank accounts, you should be doing monthly bank reconciliations. Now, I will tell you, the accounting softwares make it so much easier than when I learned when it was all done by paper, waiting for that paper statement to come in the mail and going through all the canceled checks, etc. Especially like QuickBooks Online, it provides a bank reconciliation software. And here's the important thing about that and the reason why it's important. Because when you reconcile your account on a monthly basis, so what you have in QuickBooks compared to what is in the bank physically or what cleared the bank, if there were checks that you wrote, let's say you wrote some checks to some vendors back in February and you wait to reconcile your books, let's say until December, and you realize they never cashed those checks, you need to make sure, one, they received it, because if they didn't receive it and maybe they've tried to send you extra invoices or you go to do business with them again and they say you never paid them, or they just lost it in the mail or they forgot to cash it, it's important that you're aware because you want to make sure that they get cleared properly. Because when you're recording them in your system, you're reducing that amount of what you have in your checking account. But if they never clear, technically, they physically have not reduced your bank account. So it's important to be aware when you're looking at your bank accounts to reconcile your books so that you can see, are there any errors? Are there any duplications? You should be looking at your bank statements on a monthly basis. I know they come electronically now, but you need to look at them because that is where also you could determine, is there fraud? Were checks cleared twice? Was there an error made when they put a deposit in? This is very important for you as a business owner to be aware of. And I understand you're busy doing your business, but it's better to be aware of your financial situation, of what is in your bank accounts and what you've paid on credit cards to avoid or reduce any fraud or cheating than waiting until year end to find out or just never bothering to do it and realizing you're losing all kinds of money and you're not sure why. So it's very important that you reconcile your bank accounts. One of the other things that I think is important, which is actually going to be on your balance sheet, is the inventory you may have if you have product. You definitely need to do an inventory count at year end, but I highly recommend that you either do it monthly or you do it quarterly so you have an idea of where that inventory is throughout the year. So now you have your profit and loss statement, you're taking a look at everything. It's really good because there might be things on there that shouldn't be on there. So for example, if you are a sole proprietor and you're taking the money out of your business to either use for business expense or personal, and of course, on a side note, you need to make sure you're tracking your business and your personal expenses separately. But the money you take out of the business to use is not considered a distribution per se, like it would be for a partnership or an S corporation. So you're just taking out that money and you're using it. So it won't go anywhere on your personal return. And what I mean by that is when you're filling out either a partnership return or an S corporation return, you have to put your balance sheet on there. There's some exclusions, but there's the balance sheet to be put on there. And you also have to show distribution. So for both a partnership and an S corporation, you do show your distributions on your tax return. So that's the biggest difference between a sole proprietor and those other business structures when it comes to taking money out of the business. And those distributions will show up a little differently depending on how they flow through to you as the partner or a shareholder. Those are some things you need to be aware of. And the reason why I say that is because I do come across some small businesses that are sole proprietors that are showing the money that they take out of the business as quote unquote payroll. And it's not payroll. You're just taking the money out. And it has to go into what we call an owner's distribution or owner's draw account to show the personal expenses. And the same thing really for a partnership. You should not be paying yourself any W-2 wages if you have a partnership. That is a no-no. When you have an S corporation and you're a shareholder, there also needs to be some payroll taken out, not just the distributions. So those are definitely some things to be aware of. So you have your report, you've reviewed it. It gives you a sense of, okay, where's my business going to be at? How's my year end going to be? I can use it to determine if I have to pay any estimated taxes. If you're running it in the middle of December, to give yourself an idea, you could use it as a prelim to start your tax return or have your tax professional help you start that. So that's what I recommend, is reviewing your financials, seeing where things are. So the next thing you need to do as part of that review is you need to review your independent contractors, gig workers, vendors that you pay. So here's the deal. Anybody that you pay that is not an employee should be getting either a 1099 miscellaneous income form or a 1099 non-employee compensation form, or called NEC. The difference between those two forms is the 1099 NEC will indicate self-employment taxes. So I'll give you an example of what is not a 1099 NEC. You are a business, you have an office, and you pay rent every month. The money you pay for your rent to the person you're renting from, the lessor, would be going on the 1099 miscellaneous form. Now, here's the thing. You need to determine if they're required to get a 1099 form. So what that means is you should be obtaining a W-9 form for any vendor or independent contractor or gig worker that is not an employee that you make payments to $600 or more during that year. So if you're doing your monthly rent and the person or the organization or the partnership or the company that you are renting from, a sole proprietor or an LLC that files as a sole proprietor, or a partnership or an LLC that files as a partnership, you need to be issuing them the 1099 miscellaneous income form. And that is because they're obligated to report that income. It's not your responsibility to make sure that they report that income, but it is your responsibility to send them the form, because these forms are tax forms and they also go to the IRS. It's your obligation to submit these forms for anything you paid $600 or more. You're going to get some pushback because you might have hired someone to do your website design and you paid them $1,500 and they decided to just do it and they wanted you to pay cash, which is another issue in my book. But, you sent them a check. You paid them money. So to them, it's income. So you are obligated as the business owner to get those W-9 forms and then determine if you need to file any 1099 miscellaneous or NEC forms. It's just a part of doing business, and the IRS is cracking down, and you might get notices for it, and it won't be pretty for you or for the person who chooses not to report that income. So it's very important that you do this. Now, if you have payroll also, and you are using a payroll service, you can ask them to work with you to not only obtain the W-9 forms, but to also process the 1099 forms and get those out to the appropriate people. Now, here's what I will tell you. If you are paying for utilities, like for cable and internet and water, most likely those companies and organizations you don't need to get a W-9 form for, because they're in the business of doing that. They're most likely C corporations or S corporations. They're most likely governmental organizations, things like that. So it's really important that you review your vendor list. And when you hire somebody and you're talking to them and they're a business and you're working with and collaborating with, at that point of hire or a contract agreement, W-9, get a W-9 form. Or quarterly, check your vendors and get those W-9 forms. I am telling you, it will save you a lot of headache. And I will leave some resources and links in the podcast bio for this episode where you can read up on what is considered an employee, what is considered an independent contractor, What is the difference between the 1099 miscellaneous and NEC forms? And of course, anything else that I talk about today, I will definitely leave for you. And those forms have to be sent out by the end of January. That is typically what the IRS requires. And the same goes for the W-2. Those W-2 forms and the filing of those forms need to be done by the end of January. And when it comes to the W-2 forms, you need to make sure that all of your employees' names and social securities are matching what they had in their system, because if not, you'll definitely get a notice from the IRS that this was wrong, and then it all has to get corrected. There may be penalties involved in that. So you just want to make sure all of your employees, all the information is correct. And in addition to having to make sure you have the payroll information for the year, whether you're using a payroll service or not, you should really be aware of all this. You have to make sure that not only are your quarterly payroll tax returns done, but you will have annual tax returns to do for payroll. And not just for federal, you'll have to do them for state, and you may have to do them for local. I know in the state of Pennsylvania, you have to do local tax returns as well. For earned income, employers are required to send in local annual payroll tax information. So it's something to be aware of. So definitely reviewing your payroll, making sure that's all in order. Don't just leave it up to the service to do it. And we get into that habit of, we just set this on a subscription and let it go. It's really good to review that. In fact, it's really good to review your payroll when it comes time to the quarterly reports that are due during the year. So I would definitely take a look at that. With regards to a partnership or an S corporation, when you're having those returns prepared, whether you're doing them yourself or you're hiring somebody to do them, the one form that goes to the partner or the shareholder is called a Schedule K-1. And it basically shows the flow through of the income and maybe some other stuff for the business that flows through to the partner or the shareholder. In the last 2 years, new forms have come into play, Schedules K2 and K3. They're related to, I believe it's foreign income. There are requirements whether or not they need to be filed. So it's important that you're working with your tax professional, or if you're doing it yourself, whether or not that you need to report these new schedules, and also having to let your partners and shareholders know, because when they go to file their personal returns, they will need the K-1 and possibly a K-2 and a K-3 form. So that is very important. And again, remember, if your business S Corp or partnership return is being delayed and you're not filing on the March 15th deadline, if you're delaying that, if you're extending that, it's very important to let the partners and the shareholders know, because then their tax professionals, or if they're filing their own returns, they will need to put those on extension. And as I briefly mentioned before, when you're going to do your tax return, if you are someone that has a product that you sell, you should be doing inventory at year end to see what you have left in inventory, what is the value of that inventory at year end, because that does play a role on the tax return, whether you're a Schedule C, a partnership, or an S corporation. Something that is fairly new, and I'm not 100% sure how or when it will be fully rolled out, but the IRS offers an irs.gov account for individual taxpayers. They're rolling out IRS accounts for businesses. And right now, I believe it's only for sole proprietors with Social Security number or federal tax EIN number. There is a link, and I will leave it also in the podcast bio, that you would go to the business taxpayer link and sign on, and then you'd have to give the information about your business, and it should link it to your personal account with the IRS. So hopefully you've set up your personal account as well. That is definitely something to look into. The beauty of this is now the IRS will be able to provide prior tax returns being filed, other information, probably notices, things like that. It'll be easy for you as a business to then give your tax professional access for particular returns and things like powers of attorney and for special review of stuff. So keep an eye out for that. It's really just a matter of being organized. So you have your profit and loss statement, any fixed assets you purchased for during the year, whether it's computers or furniture, or you made significant improvements to your place of business. You want to make sure that you have the date of purchase, how much you paid for it. Did you sell any fixed assets, or did any fixed assets break that had been being depreciated? That is very important to create a list to give to your tax professional so that they can put those in the return and do the proper accounting for them on the tax return. There's one other area that is important to pay attention to, and it is called the beneficial ownership reporting requirements. This is something that KMZen just came out with. The gist of it is, in 2021, Congress had enacted the Corporate Transparency Act. The law created beneficial ownership information reporting requirements as part of the United States government's efforts to make it harder for bad actors to hide or benefit from their ill-gotten gains through shell companies or other opaque ownership structures. So this is the Financial Crimes Enforcement Network through the Department of Treasury. This is not an IRS requirement. This is something different. All I'm going to be able to do here is just give you brief information of what it is. I myself, as a small business owner, I'm an LLC single member myself. I'm going to also have to be required to report this. So basically what it's saying is beginning January 1st of 2024, many companies in the United States will have to report information about their beneficial owners, the people, the individuals who ultimately own or control the company. And it has to be reported to KMZen, and there's small entity compliance guidances. And again, some of this stuff can change from when I've recorded this episode. So I'm giving it to you as I know of it in the end of November of 2023. I'm going to have a link to this document as well. It goes through who needs to be a reporting company. And basically what they're saying is your company might be a reporting company and need to report the information about its beneficial owners if your company is a corporation, a limited liability company, or otherwise created in the United States by filing a document with a Secretary of State or any similar office under the law of a state or Indian tribe or a foreign company and was registered to do business in any U.S. state or Indian tribe by filing. And that's something that you'll need to determine. There are a list of 23 types of entities that are exempt from this, so you may fall under that. They do include publicly traded companies, nonprofits, and certain large operating companies. So it's definitely something to be aware of. You would have to go to KMZen's website to report this. The reports will not be available until January 1st, 2024, but they are saying that if you are created or registered prior to that date, you have until January 1st, 2025 to report. They're giving you 12 months to report. But they're saying if you're created or registered on or after January 1st of 2024, it needs to be reported. Now, I believe they extended that to 90 days. The original information said 30 days of notice of creation or registration, so they're giving people 3 months to fill this out. And then they say if there are any updates or corrections to the beneficial ownership information that you previously filed with KMZen, I believe that is still 30 days after you make any updates or corrections. Again, you'll need to check with KMZen, just putting it out there to make you aware. And as always, it's important that you consult with either a tax professional or an attorney with regards to your business situations. Hey, it's your financial maven, and I want to hear from you. Feel free to leave me your insights and money stories or questions that you may have about money. You can visit www.yourfinancialmavenpodcast.com and click on the I Want to Hear From You tab. I can't wait to hear what you have to say about money. The purpose of this podcast is to provide general information on the subjects discussed. It is for educational, informational, and entertainment purposes only. You should consult your CPA, accountant, or tax professional for all of your specific financial needs or situations. Your Financial Maven is hosted and produced by Samantha M. Besnoff, CPA, and Your Financial Maven, LLC. Editing is done by Kris Zarnoch of KMZen Creative. Music is written, composed, and performed by Daniel Shore.